let's understand what is the difference between EPS, that is earnings per share, and diluted EPS. Look at this part of a financial statement where they have reported the EPS. If you notice, there is no change in the basic and diluted EPS in the previous year 23, but in 2024 their basic EPS is 12 whereas diluted EPS is 10.98. So what causes this difference? Let us understand. For that, first of all, we have to understand what is EPS. EPS means the profits that are allocated to every individual share of the company. So basically we take earnings available for the equity shareholders in the numerator. We will divide it by number of equity shares outstanding. So we will get earnings per share. Whereas in diluted EPS, we will be making adjustment in both the numerator as well as in the denominator. Instead of having earnings available for equity shareholders in the numerator, we will carry adjusted net profit and the denominator will get modified with adjusted number of shares. So there is a change in the numerator as well as in the denominator. When we say adjusted net profit, we basically take the profit after tax and with that we will add back certain interest. And not just interest, it is net interest. You will understand this with an example I'll take you through shortly. And the denominator is adjusted number of shares. That is, basically we'll be carrying the number of outstanding equity shares. But what is the adjustment that is coming in? See, companies will also issue convertible securities like debentures, stock options, warrants. The holders will be given an option to excise or convert them as equity. So if they are going to excise that option, then what will be the change in equity? Already they have certain number of existing equity shares plus potential equity shares. That's how we arrive at the number of outstanding shares in diluted EPS. Let's take a quick example. Here is a case where the profit after tax is 10 lakh. Already existing equity shares is 1 lakh and they have convertible debentures. It's basically 1000 debentures of rupees 1000 each, 10% interest. And here the conversion route is each debenture can be converted into 10 equity shares. With this background, let us calculate the basic EPS and diluted EPS. Basic EPS, it is simple profit after tax in the numerator, number of shares outstanding in the denominator. So it's going to be 10 lakh by 1 lakh. It's simple, 10. For diluted EPS, we have to calculate adjusted net profit. Already we know profit after tax, which is 10 lakh. With that, we have to add back net interest. Why we are adding back net interest? Because if these convertible debentures are converted into equity, there will be no question of paying interest. So we add back that. And how do we arrive at net interest? We take the net interest, we'll net off the tax benefit. So first let's calculate what is the interest here. So 1000 debentures of 1000 each multiplied by 10% will give you interest, which is 1 lakh. Assuming 30% tax rate, the tax benefit on account of this interest is 1 lakh into 30%, that is 30,000. So the net interest is difference of these two, that is 70,000. So we got the numerator one element, that is net interest. Hence it is easy to calculate the adjusted net profit, which is profit after tax plus net interest. 10 lakh plus 70,000, it is 10 lakh 70,000. Next, let us calculate adjusted number of shares. Already they have 1 lakh shares outstanding. And now if these 1000 debentures are converted into equity, what will be the number of shares? And here you have information, each debenture can be converted into 10 equity shares. So 1000 into 10, 10,000 is going to be the new addition. So we can calculate adjusted number of shares as the existing 1 lakh plus new shares, that is 1 lakh plus 10,000, 1 lakh 10,000. So in the denominator, we can have 1 lakh 10,000. And let's now calculate the diluted EPS, which is adjusted net profit of 10 lakh 70,000, which we already calculated, and adjusted number of shares, which is 1 lakh 10,000, and the diluted EPS is 9.73. So look at here. The basic EPS was 10 and diluted EPS is 9.73, and the message is if those holders are going to exercise their option of converting their debt into equity, then the dilution in EPS will be from 10 to 9.73. Do you wish to learn more? I invite you to check our Diamond Live membership. This is a membership program which will give you access to 130 plus pre-recorded online courses related to banking, credit, finance, accounting, costing, and so on. It will also give you access to 100 plus ebooks related to these domains. Gives you access to all the live classes which we are going to conduct. Will also give you unlimited access to all the future e-publications in the form of courses, ebooks, templates, and so on. So this membership program is only for those who want to be a lifelong learner. So if you are a lifelong learner and if you want to make use of this opportunity, you just have to WhatsApp me diamond to the number seen on the screen or simply comment DUM. I will share you the details.